You wouldn't know it by listening to the news or reading the paper. Hello, good afternoon. This is Jim Perry at Perry Capital in Miami, and we are going to bring you 10 key points today, which is our macro market message, so you'll be prepared for the week ahead. Let's start with the Supreme Court. The Supreme Court today passed along its ruling, which curtails executive power when it comes to taxation. The market expected this, the economy expected this, and the stock market expected this. The S&P 500 was up about 50 points today, mainly because it's an expiration Friday and it's a bull market. So no impact whatsoever. You wouldn't know it by listening to the news or reading the paper. Everybody had about an opinion about it, and they're pretty bipolar, right? Either you're for them or you're against them, or you're for the government or against the government, or you're for U.S. manufacturing or you're against it. It doesn't matter. The point is, U.S. manufacturing is returning to this country for a lot of geopolitical reasons and for a lot of economic reasons. That trend will continue. The build out of that manufacturing and the energy and data behind it is the foundation of the AI industrial revolution, which will also continue. There will be winners and losers in that. Let's face it, technology has, since the beginning, always been about cutting costs. That's what it's about now. It's cutting costs and making things easier. There will be losers. Be careful. There's going to be plenty of them. Every single cycle in technology, highs and lows, have had overreactions to both. The bottom line is, this is a bull market because the economy is expanding, market valuations are reasonable, and we are looking at record sales and profits with corporate America and small businesses as well. The U.S. stock market continues to be in a bull market, and the reason for that is that inflation expectations are falling and recession expectations are falling. In fact, I read today that recession expectations are as low as they've been in 4 years, and the 10-year Treasury is just over 4%. It was closer to 5% a year ago. Interest rates are very stable, credit spreads are very stable as well, and corporate profitability is at record levels. In fact, profit margins at the S&P 500 are running at 13.2% this quarter, with almost all of the S&P companies having reported. There's a few exceptions in the next week or two. The point is that investors will benefit from a little bit of inflation and good growth. The economy is doing well because the labor market is doing well. The concerns about a collapsing labor market are unfounded in my view. I think there's a redistribution of employment. I think that's happening on the industrial side and the technology side. That will continue, but I would very seriously doubt that unemployment will get to a level where all of a sudden the Fed is going to have to reduce stimulus, especially in the next couple of quarters. So, bull market, stay invested, buy dips, buy the companies that are going to benefit from a growing economy, growing reindustrialization, the AI revolution, and technology and defense are the areas where you should stay overweight.